Yo, what's good YouTube? It's your boy Lethabo Mampana and I'm back again with another YouTube video. If it's your first time up in this channel, make sure you hit the subscribe button so that you can become part of the family. And also, if you have already subscribed to my YouTube channel, shout out to you. You and I are buddies. Hit the like button for the YouTube algorithm so that this video can be spread out to other people in recommendation so that they can also enjoy the good content that comes with this video. Guys, today's video is a little bit different. Not even a little bit different, but it's totally different to other videos that I'm used to doing on my channel. So as you can see right now, I'm on my screen and I'm just trying to actually break down Nasdaq. So the title of the video, as you could see, is the Nasdaq breakdown, right? So this is the breakdown on Nasdaq, how it is going and how it is looking. How can we capitalize on it, or how could we have capitalized on this pair? So I'm currently on Nasdaq on 4-hour time frame. So let's begin and analyze the market. So when you are looking at it as it is right now, you would swear this is on an uptrend, right? So we're going to follow price action, and that's what will give us a perfect clue of what is it that is going on. So firstly, I'm gonna give you guys two things. If you are a type of trader who like to swing, then I'm gonna show you how you could have capitalized on Nasdaq as a swing trader. Then if you are a day trader, then I will still dive deep and show you how you could have capitalized, or how you can still capitalize from this trade. So I'm going to break down Nasdaq, and I'm going to do the top-down analysis of it. Then we can have a better understanding of how it moves. So this is a low. I'm going to start from here. This is a low, but my chart will be a bit complicated, or a bit messy. Let me just make this one a high. All right, high, higher low, then this is a higher high. So you can very clearly see that we are going up, right? So what was the last low before this higher high up here? Let me delete this. Okay, so the last low is this one. This is the last low before price put in a new higher high, right? So I'm just gonna mark everything down. Let me just put a trend line and show you when the market was breaking structure to the upside, right? This is where the market broke structure to the upside, and this is our higher high. So this is the all-time high as of now, and then we're gonna mark this level down here. Let's see if price went down to break the structure to the downside as change of character, right? So this is what's happening. So this was a high, or rather higher high, higher low, higher high. Price broke the structure to the upside, then it left this low. So price came down and it changed character here. So let me just quickly label this thing here so that you can see it, but I'm gonna remove it soon. So this is our BOS, which is a break of structure. Let me just increase it. So this is a break of structure. So now this is smart money concept, right? It's not ICT. So I don't even know what the difference is between ICT and SMC, but I would like to believe this is SMC because I don't know ICT that much. So this will then be our change of character. This will be our change of character here, and we're gonna lock it. So we have a break of structure to the upside, then we have a change of character to the downside, meaning that the market has changed direction. We are no longer going up, but we are now changing direction to the downside, right? So then let's now see our point of interest. Remember, on 4 hours, guys, I always say on 4 hours time frame, what I'm looking for a market structure, the direction of where the market is heading, right? So once I have established that, then I'm going to check for my point of interest in terms of highs and lows, or point of or order blocks, right, as my point of interest. So let's first start with those who are swing traders, right? We are still going to look at 4 hour time frame, right? So then now we are on 4 hour time frame. Let me just zoom this. So then we're going to look for our point of interest. So firstly, for our swing traders, what you will then need to look out for is break off structures, right? So as you can see, this is a high, price went down to put in a low, a lower high, lower low, all right? Or should I say lower low here? Let me just say lower low here so that it is less complicated, right? So this is a high, low, lower high, and lower low, lower high, lower low. All right, so this is where the price is at the moment. Let me remove these things. I just wanted to make it clear to you guys so that you can better understand it. So then now we have a lower low here, right? Then we're going to mark it. So I'm talking to those who are swing traders right now. Let me show you how you could have capitalized from this. So this is a lower low. So price broke structure to the downside, putting this lower low here. Then this was a lower high, right? So what you then need to do is to take out a Fibonacci retracement tool. So I made some adjustment on my Fibonacci retracement levels, and this is how they go, all right, for swing trade, for those who are swing traders. So then what we need to still look out for is order blocks, right? The order blocks that we could potentially take our trade from. Remember, what I kept on saying is that we're going to look at any order block that is above 50% level, right? But then in this case, it has to be above 50% level, and it also has to tap into that 71 and 79 level, right? So we're going to look at that. So as you can see, this order block here is just above 50%, right? So we're not going to focus on it because price had already moved there. So this is the premium that we need to look out for, and this is another order block sitting where the 71 level is. So we're going to mark that order block because it's a high chance order block. And another order block is the one at the top here, but for now we're going to focus on this one. All right, so this is what we need to focus on. Let's mark it and let's see if okay. Let me also just put back that Fibonacci retracement tool so that I can explain something. So we pulled our Fibonacci retracement tool then to here, right? So what we will then do, we're not gonna take a trade from where the order block starts. No, we're going to either take our trade from 71 or 79. So then, meaning that we're gonna have about two trades. Firstly, we're gonna place a sell limit on 71 level, and secondly, we're gonna trade another trade, which will be the second trade at 79%, right? So then this is our first trade, and our second trade never got triggered. As you can see, price never went to that 79, so we got triggered here, and we will always target this low. And where do we put our stop loss? Normally our stop loss, we put it at this level, which is 100, but then because we know this is Nasdaq, we're just going to simply put it at 79 because price never went up to that point. So this is how you are currently holding a profit on Nasdaq, right? So now this is for swing traders, right? So you're going to hold until this level here, right? So if your account is huge, you can even still take a trade right now, or if not actually you can still take a trade right now, but you will need to then be sure of what you are doing. Your account needs to be very healthy so that it can handle the drawdown, you know. Then let's go now for those who are day traders. So I'm just going to remove this position right now, and I will still use the same information. So we are still on for our time frame, right? We know that now the market has changed direction. It's no longer going up, but it's going to the downside right now. So then now when we pull out our Fibonacci retracement tool, we still see this order block here as our point of interest. So I'm just going to leave it as it is right now, and I'm going to dive to lower time frame, or which is 15 minutes in this case, and we will see what's happening there. So then so this is for our day traders, right? This is for our day traders. So this is where the market is at the moment. So before the market tapped into this order block, what happened? It broke the structure to the upside here. So when price was going to the upside, it left this low here. This is the low that was left when it was going up. So price went up, it broke the structure, then it tapped into our 4-hour time frame order block. Then what we waited to see, if price will come and break this level to the downside so that it can realign with the 4-hour time frame market structure, if you get what I mean, right? Then what happened? Price came down, it broke the structure, right? Or rather it changed character, and then it has now realigned with a lower time frame. So then after doing that, we wait to see which order block can we take a trade from. Then that's where our Fibonacci retracement tool comes in. So we're gonna put it at the low of these candles. Then we're gonna look to see which order block is a qualifying order block, right? So because now we are looking at a day trader or day trading, we are still going to look at the order block that is the order block that is above 50%, right? Then we are still going to look at order blocks that are above or within the 79 and 71, right? So we're going to mark all the order blocks that we need to take our trades from, or that we are looking to take trades from. So this is the first order block that we are looking to take our trade from, right? So look what happened. Price changed character, then it went up, it tapped us in, then it almost hit our take profit. Actually, it hit our take profit because our target, no, not even take profit, no, it didn't hit our take profit as yet, but we are still holding. So let me just remove this thing here and let me show you. So this is the second order block that we are going to wait for price to come, if it happens to come. So this is where we're gonna wait for our second trade, to take our second trade for day traders, right? So right now we are in this trade because price came back up and it tapped us into this trade, and our stop loss is here, right? So our stop loss is there, then our take profit will be here at the bottom. Boom. So this is how it's currently going with Nasdaq. So this is how you can just try and monitor price action. So I'm not saying go ahead and execute a trade right now for sale and do things that you do not maybe fully understand. But what I'm saying is that it has indicated to us on 4-hour time frame that Nasdaq is currently going to the downside. We do not know how long it will go to the downside, but for as long as we follow price action, then we will get a better understanding of what is it the market is doing. You know what I mean? So what I'm trying to show you right now here is that you need to religiously follow price action at all times. So if you follow price action, you will never get lost, because it leaves clues when it goes up and it leaves clues when it goes down. So you will always have an idea of what is it the price that is trying to do, because we have our break of structures, we have our change of characters, we have our supplies, we have our demands, we have our order blocks, we have everything that gives us a better understanding of what is it that we need to do next, or should we see certain things happen, you know. So this is basically the reason why I made this different video, so that I can show you guys how I approach the market, and yeah, just to show you how I approach the market and how I look into the market in depth, you know what I mean. So if you can just follow the same thing, then everything will be great. Excuse my phone, guys, let me just quickly take this. All right, I'm sorry about that, guys, about the call that got into my phone right now. But yeah, so I was about to finish up my video. So that's basically it in a nutshell. There's nothing more that I can do on Nasdaq, or there's nothing more that you can do on Nasdaq rather than to wait, you know. So if this trade had left you, it's fine. You wait to see the market, or to see price action. You wait to see what the price action does. You know what I mean? So if you want to get into this trade right now, what you need to then focus on, you need to focus on break of structures. Then as soon as price keeps on making break of structure, then all you need to do is just to look for clues. Clues is supplies, the order blocks that the market leaves when it goes to break the structure. Then that's where you can basically wait to take a trade from, if this one left you already. And same thing applies to those who are swing traders. On 4-hour time frame, you are still holding until it gets to that to the bottom, you know. So once it gets to the bottom and it goes even further down, then you need to pull out your Fibonacci retracement tool. Then you look for order blocks that are above 50% retracement tool. Then you take your trade from there. It's as simple as that. You just need to follow price action and you will never be lost, you know. So that's it, guys, from me, Lethabo Mampana Tisana, and I'm out. Peace.